Hi everyone, and thanks for checking out my channel. I'm going to do a quick review on WTI crude oil. I didn't actually had a look at this for quite a while now. That changed the strategy and decided to wait since we were ranging and grinding up very slowly. Had a couple of falls breakdown. The main one was of course down here where we got that close under the 20 MA, but we could see that that trend line in the bottom did actually act nicely and the price did bounce back instead of continuing lower. So that got invalidated, so we got that new rising wedge that I believe is now the right one, so which means that when this one will break down, we will have a clean signal on the short side for the target that still not changed, which is 34, between 34 and 35, and basically the lower end of the large gap we had back in March. If we look at the rising wedge, we had some interesting sell signal that triggered partially this week. We had that doji candle, I believe 26, that was on Wednesday. Then we got some nice follow through, but still some buying action at the bottom. So that candle, the red candle, is not highly convincing, my opinion. It's not a proper evening star or capitulation by the sellers. Large spike higher. So what I was hoping for, if we switch to the weekly chart, was to go make a touch on that 50 MA that's clearly pointing down at 44.3. The question is now, can we actually get to that level? If I take the current divergence we're having here, I did change that trend line slightly since we broke a little bit higher, but it's still diverging quite significantly from the start of that move. We have been a bit of a move, but I believe it will be tight to actually go much higher than 43. So aggressively and believing that this will break down, a comfortable short entry or accumulation could start need 44 should we actually get some proper rejection at that level. When we check what happened as well on the quote reports, clearly we can see the open interest not pointing to end of move, but we can see that the management they start increasing the short position, reducing the net long. They're still largely long, net long on oil, which is probably a good thing to fill up the move when it will start breaking lower. And we can see also the swap dealers are starting to reduce their short positions, so that's also potentially pointing to covering against the price that could be actually moving lower. The target is unchanged, as I said just before. So what I'll be doing, I'm considering loading up short should we actually get proper rejection here. I believe if we switch on the 4 hours, we can see here that that was a proper rejection but didn't get any follow through. So we need something like this, but a little bit clearer in terms of rejection, so not getting that sort of a large green candle at the bottom, and potentially we could still get some drop back to 42. If that's the case, I would be careful trying to catch that breakdown. Could be another false one, and I would definitely not enter any short position below that trend line until we actually get follow through after the first close on the daily under that trend line. It means, for example, should we close at 42, I would wait for the next day to close buy underneath, not getting that kind of dodgy candle or something that could point to a reversal, not getting caught, because at 42 that's a bit low to actually take on the sort of the drawdown that you could get if the price is meant to shoot above 44. So yeah, that's about it. That's the plan. So no position on WTI for now. Of course, in terms of the fundamentals, we have seen ramping up in terms of the production, so number of rigs did increase for the first time. My opinion, I think, is that inventory, despite large withdrawal every week that we've seen for the past 4 or 5 weeks, should start to ease, and waiting also for some confirmation there, but that could be the trigger for some move to the downside, keeping in mind that we had a massive move to the upside. Correction to 34 wouldn't be extremely shocking, even if we switch back to the weekly again. It would not necessarily invalidate potential continuation of the uptrend to break higher later on, but definitely in terms of the indicators, especially on the daily, it's pointing to a correction. It's been pointing to correction for quite a while now, so we'll have to get some resolution for this very soon. Should we actually get, that's the last point here, that's sort of a support line here. Resolution could be only potentially like in October or somewhere there, when these two lines will actually cross and force the trade down. I believe we'll get that earlier than this, especially with that rising wedge pushing there. So we're looking at potentially mid-September for some resolution. Either we're gonna get proper breakout to the upside, or we get proper move to the downside. Target would be slightly higher, but at the end we'll get at least some clear direction for the end of the year. So yeah, that's about it. Thanks for watching. I wish you a safe trade. Make a review of this midweek, see where we go, and if I took any position, I'm just still waiting, keeping in mind that's going to be a swing trade, keeping the position potentially for a few weeks, and looking for large return, not small trade. So we'll keep that for as long as possible until the swing is actually finished. Thanks for watching. Speak to you soon. Cheers, bye.